Today is Monday, October 5th, and this is a review of the stock market activities today. Before I start, and while you're reading the agenda, allow me to put two disclaimers out there. Number one, we are heading to a presidential election season here in the United States, and the outcome of the election and the series of events during the election will impact financials market. So we will talk about politics a lot more during these upcoming weeks. So here is a warning. If you are very sensitive, or if you are a tribal person, team blue, team red, and you will be offended easily by any criticism to your cult leader, you are not going to be able to survive watching this channel. This channel is not for you, because in this channel, we speak the truth, we make fun of those who are in power, and we stand against fraud, corruption, all wrongdoing, regardless of which side it comes from. So if you're not going to be able to handle it, visit Costco, get one of those jumbo diapers packages, some pacifiers, and you might be able to survive, but I don't recommend it. I recommend and suggest going to another channel. Disclaimer number two. Lots of people complain about the length of the videos. Here I am giving you my time for free, presenting valuable information as I see them. Meanwhile, some people are complaining. You don't mind wasting your time watching football and the Kardashians and my 600-pound wife and all the garbage you watch. But 20 to 30 minutes a day of valuable information is suddenly too much. Again, if you're looking for a channel that would tell you, hey, today we're buying Sorrento, tomorrow we're buying Nikola, and here are a bunch of tickers that you need to buy calls on, then this channel isn't for you. Likewise, if you're looking for some technical analysis or somebody slap a bunch of lines on a chart randomly and then tells you to subscribe and buy their course and all that garbage, this channel isn't for you. This channel is for the serious investor and trader who want to make this a full-time career. Furthermore, I'm segmenting everything in each video so you can go ahead and watch the part that you're interested in. I don't know what I can do more than that. And with that being said, we do have a market to cover, so let's go right in. The diamonds closing in the green, 465.83 points, or a gain of 1.68%. The Nasdaq in the green, 257.47 points, or a gain of 2.32%. S&P 500 in the green, 60.16 points, or a gain of 1.80%. Markets, of course, today looking forward for stimulus optimism and, of course, good news regarding the president's health condition. We didn't get stimulus, but we did get a discharge from the hospital for the president. And you see, of course, a rally across the board. Here is the sector's performance. Everything is in the green. They all deserve a medal, but we only have 3 to give. The gold goes to energy. Look at that. Energy leading the pack. Is this April's Fools or what? Technology for the silver, healthcare taking the bronze. The laggards of the day, real estate, consumer defensives, and utilities. It was a risk on day. Moving on to the futures market. Right away, you see crude oil, big day for crude, over 6%. The problem is we've seen these rallies in crude, big impulsive rallies. They don't last, and crude gives it all up. We will see if crude keeps these gains or not. Of course, crude is rallying due to the decline of the dollar index from critical levels. We will cover the dollar index in the charts analysis. But here we go, soft. You see OJ continuing to build up on the gains. Coca lagging today. As far as metals, you see palladium. Palladium been the outperformer for a few days now in the futures market, certainly last week. And of course, we see copper taking a break today. Silver did okay as well. The action in meats was very muted today. Grains, we saw more gains and a reversal from the retreat building on prior gains for soybean oil. Of course, you don't see the gains here on the screen because the new session already started, but take my word for it, soybean oil had a rally today. And now let's check on the heat map right away. It is a sea of green everywhere with very few minor exceptions such as left, and you can see DraftKings had a massive week last week, so did Twilio lagging today, and of course we saw weakness in Domino's Pizza and Dunkin' Donuts. Other than that, it's clean, green across the board, very impressive breadth today. Now I want you to pay attention to the ETF heat map, specifically the gains we've seen in the junk bonds market. The HYG and the GNK, these are all ETFs for junk bonds. We saw fallen angels also catching a bit today. Now you combine that with a weakness in the US dollar, a rally in indices for the equities market, and a big call buying participation for the upside. And you see that the bullish case here is starting to win. We'll talk a little more about that in the conclusion of this video. But for now, we're moving on to the rotation trade. Today was a risk-on day, a momentum day, and you saw momentum stocks outperforming the stay-at-home, or rather the reopening stocks, the lagging stocks. But it was a green picture across the board. We saw the tide that lifted all boats. Optimism was evident from the start of the day, and of course, as soon as we heard that the president is going out of the hospital, regardless whether Nancy and Mnuchin actually reached the deal or not, that was enough fuel for the market to rally. And of course, market participants did the knee-jerk reaction. They will think about it and reflect in the days to come. But for now, the thinking was as the following: good news equal, let's go on and buy tech. Buy the same names that have been rallying and the names that got whacked on Friday, for that matter, when the president went to the hospital. So now the president comes out of the hospital, guess what? The same names catch a bid. But we also saw significant gains in the reopening names such as Chevron, the energy sector, Emerson Electric, big gains today. Ulta Beauty did phenomenal today. General Motors. So a good day across the board. Very few exceptions here. Moving on to the big casino, the options market. Let's see how the tables did today. Per usual, the hottest table in the casino is Apple's table, leading the day with 1.17 million contracts traded today. About 68.5% of those were calls. The table of Tesla, per usual, at number 2, 672,000 contracts today. Approximately 61% of those were calls. And at number 3, AMD. AMD, of course, lagged the market in the semi-sector last week. And right now, the casino is saying that AMD is going to have a good week this week, better week anyways, coming in with 335,000 contracts today. 72% of those were calls. Now, let's check on the volume leaders. And as you can see, per usual, Apple leading the day, and the gamblers are pretty much rounding up to the next number expiring this week. You see the 115, the 117.5, even the 120 catching a bid. Of course, Apple is a casino now, is a slot machine, and the bids that Apple will climb higher. When we switch to the change in open interest, here is an interesting piece. Remember the importance of Apple 120 calls. We talked about them last week, and they were a very reliable indicator to the psyche and sentiment in the market. Well, what are they doing this week? They're actually buying the 120 calls in Apple expiring this week significantly. However, we also saw an interesting trade for Apple buying the 120 put. These, of course, for January 2021. So it is interesting that the short-term outlook for Apple traders and gamblers are betting to the upside, being more confident this week than last week. But in the long-term picture, traders are saying Apple will struggle from this point on. Very interesting trades here. Now, let's look at the decrease of open interest, and you see Baba calls being closed, and you see Alibaba lagging the rest of the technology sector today. But of course, the interesting call here is Tesla. The 400 calls are being closed. These are of course expiring October 16th. So perhaps traders are saying here that there is a downhill journey for Tesla coming. And this time around, they're just not going to roll it downhill. There will be electrical power behind it. Of course, you see the importance of the change of open interest. Last week, we've witnessed unusual activities in closing calls in DraftKings. Of course, I joined the trade and I bought some puts that didn't work last week, so I ended up closing them. And it was a little confusing, but you saw what happened to DraftKings today. Turns out that they're selling more shares, and that of course weighed on DraftKings. It was down over 5% today. So somebody knew about this information ahead of time, and they started closing their calls. It's just that my timing sucked and I did not know about the information. But this is why it is very important to scour the activities in the options market every day so you can find out what insiders are doing. People who have the information ahead of time. They can cheat, but they can't hide the evidence. You can see the trades that they have done. Moving on. Here are some interesting trades that I found for you. Number one for Square. This is of course from the same trader. By the way, all these contracts are expiring this week. So this person is making a big bet that there will be a massive move in Square stock, up or down. We're not sure yet. Here is the trade. We see the 190 call being traded today and an identical amount of contracts also being traded for the 170 put. So this could be somebody who's betting that Square will have a significant rally finishing the week over 190. So what they're doing is they're buying the 190 call and they're selling the 170 puts to raise cash. Another explanation that they're betting on Square to collapse below 170, and they're buying the 170 puts and they're selling the 190 calls to raise cash for the trade. And here is of course the third explanation, and the least likely one, that this is a naked iron condor where they're just selling calls and puts, betting that Square will stay flat. Keep this trade in mind and we will see the full explanation behind it by the end of the week. Another trade, a clearer one here for DocuSign. This is of course a debt spread, a call spread, buying the 240 calls, selling the 250 calls. Very simple, straightforward, betting on gains for DocuSign this week. And the last interesting trade here for Peloton, buying the 105 puts expiring this week. And the trade here suggests that Peloton is getting a little toppy and it is time to bet against it. We will see how that works out by the end of the week. And now, moving on to the headlines that shaped the day. Starting with a headline for Goldman Sachs saying that the Biden's presidency and the blue wave will be good for the stock market, and this is why equities rallied today. Let's just address the ridiculousness of the euphoria in the market right now. If there was a mushroom cloud outside, a result of a nuclear war, the market would still rally on post-nuclear war optimism. This is the ridiculousness of the market. You got a president who drops, goes to the hospital, and the market, instead of panicking, they figure out, oh, that would make passing a stimulus deal more likely. And now we know there is no stimulus deal. It doesn't matter. Trump being weakened, that is good, because Biden's presidency becomes more likely and the chances for a contested election becomes less likely. Oh, that is good for stocks. This donkey mentality has to end. and it will end badly. Because here we go, the president is out of the hospital, and if the assumption was that if he's in the hospital, the stimulus deal is more likely to pass. Well, now he's out, so isn't it rational to assume that the stimulus deal is now less likely to pass? No. It doesn't work that way on the downside. These excuses only work for the upside. It shows you the complacency and the euphoria, but also that the momentum is not out of the market yet. Very important thing to keep in mind. Anyways, the president has been discharged or planned to be discharged. Perhaps by the time this video is released, the president will be already in the White House. And here is his tweet, of course. He's saying that he feels 20 years younger and the coronavirus is the best thing that ever happened to him. I mean, it made him 20 years younger. I want to get some of that coronavirus. But of course, we know that the president is on a very, very strong Rambo-like steroid. A very significant side effect of this steroid is mania and euphoria. This is not me saying it. This is the opinion of the medical experts. So we will see if the mania and the euphoria for the president will turn into a depression by tomorrow and things will change and we'll start getting worried again. But for now, of course, he is tweeting about the stock market, bragging about it. And we all know once he brags about the market, it marks a market top. And here's a tweet I released saying, "Thank you, Mr. President. I'm now switching my calls to puts." And of course, speaking about the stimulus, we had a no deal yet again today. However, by the end of the day today, Nancy and Mnuchin will exchange their final proposals together. So we shall find out very soon as tomorrow, whether we do have a deal or not. And of course, here are the results of some polls I conducted on Twitter last night. And you guys were spot on in predicting that we will not have a stimulus agreement by the end of the day today. However, for the second poll, whether Trump will be released today or not, the majority said no, but it was very close. So again, these were very, very accurate. Now, we did have some economic news today, starting with the ISM Services Index, which came out better than expected. This is a survey, of course. And different sectors had different outlooks for the economy. For example, if you read the full report, the arts and entertainment sector, aka amusement parks and theaters, said that they're not optimistic and the picture is getting very, very dire. On the other hand, the construction sector is actually so hot they can't find employees anymore. So if you're looking for a job, try looking for construction-related jobs. They got openings, yet they can't find employees to fill them. That's according to them, of course. But yet again, if you don't want to work construction, you can open a Robinhood account, put a blindfold on, and buy calls randomly, and you wouldn't need a job anymore. Or you can open an OnlyFans account, sell pictures of your feet, and you're not gonna need a job anymore. And the last bit of news here, a little on the negative side, we do have economists now becoming more pessimistic regarding the economy and downgrading the outlook for the economy. Primarily, of course, downgrading the growth expectations for the fourth quarter from 6.8% to 4.9%. Again, it shows the distortion and the divorce between the picture in the actual economy versus the assets markets. And now, moving on to the charts analysis and starting with the SPY, the S&P 500. Here is a 1 hour chart and I'm trying to illustrate for you how to figure out points of support and resistance with accuracy, just like I do. Remember, when you reverse and you start trading higher, any gaps you made as you were trending lower become a goal to achieve and a destination to close. And they become resistance until broken, and then they become support. Likewise, on your way down, any gaps you left on your way up become a destination and a goal to achieve, and they become support until broken, and then they become resistance. Very simple principle right here regarding gaps and levels of support and resistance. In this case, of course, we do have the next resistance for the SPY in or around 342.40, but we also do have two levels of support that we have broken today. They were resistance, now become support after being broken. Support level number 1 in or around 339, support number 2 at 337.70. And I will show you how these levels worked from a 15 minutes perspective. Here we go. You can see, of course, from today's action that the level of about 337.70 acted as resistance. It got broken, and then the same level acted as support later on. Likewise, the level of 339 acted as resistance earlier today, and you saw by the end of the day the market took another shot at it, broke it, and now it became support. Moving on to the daily chart of the SPY, what do we see here? The case for the reverse head and shoulder is becoming stronger as we progress through the week. We only did one day, but based on this one day, it looks that the bullish case wins for now. Keyword for now, because we are bounded to the flow of news regarding stimulus and the president's health. But from a technical perspective, the SPY acted very positively today. Shifting to the Qs, here is a 1 hour chart, an hourly chart, and I want to show you the levels of support and resistance and how they coincide with prior gaps. You see, of course, the first resistance we're about to face in and around 281.60, and the next level of resistance around 283.38. These levels coincide, of course, with prior gaps we made in the chart on our way down. Now, as we crawl back up, they become resistance. They become a goal to achieve and to rally to. And of course, the levels of support here in the Qs. The first level is 274.40 and the next support at 271.77. These also coincide with prior gaps we've made on the chart. Now, taking a look under the hood for a 15 minutes chart for the Qs. Right away, it was a gap up day, gap up and continue to climb higher until, of course, we reached the afternoon and there was a little uncertainty. We didn't hear from Walter Reed's hospital regarding the discharging of the president, and you saw a little bit of profit taking. But as soon as we heard the news about the president being released, as you can see, the market caught a bid and rallied all the way to the closing bell. What's going on in the daily chart? As you can see, the head and shoulder, reverse head and shoulder pattern is becoming clearer now. That, of course, does not take the weekly bearish ABC pattern out of the table yet. But for the micro picture, today's action was bullish and was another score for the bullish case for now. Moving on to the VIX, a daily chart. Likewise, it was a gap and crap. Per usual, the VIX gapping in the morning and then giving it all up, trending lower throughout the day. Yet all in all, today the VIX managed to close in the green. The VIX still has a lot of power to release, and it is very stubborn. It doesn't want to go down, and as we get exposed to more uncertainty, forget about the euphoria today, but as we get exposed to more uncertainty, the VIX will catch a bid again, even among the bull community, because they want to hedge against the risk. So all the way until the election, I am bullish on the VIX. Now, moving on to the Dixie, the dollar index. 93.50 was the important level of support here. All you needed to watch today is the dollar index chart. The moment we've broken the 93.52 support, that was your signal to close your bearish bets on the market and stay with the long bets. Breaking the level is very significant, and as you can can see, the dollar tried again to climb. However, it was rejected from the same level, further solidifying a bear outlook for the dollar here in the short term at least. And you saw how equities reacted today very, very positively, specifically the dollar sensitive sectors such as materials and energy. Here is a daily chart of the Dixie. Remember, we talked about an ABC pattern, a bullish ABC pattern. However, that got interrupted with the news about the president, and the longer the Dixie chart consolidated and didn't make the pop higher, it weakened the ABC case and it gave way to the bear flag case. Is this what we're seeing here? A potential bear flag which will continue to decline lower and lower in the Dixie on the table. But switching to the macro picture, the weekly picture, the ABC pattern is still on the table until and unless you close the week below the breakout green candle. If we do close the week below there, you know that the rally in the dollar is over, equities would rally, and here is another name that would rally as well, gold. Here is the picture for gold from a daily perspective. For now, we still have a bearish outlook for gold that will reach a level of resistance around 1925 or so. It will get rejected and will trend lower all the way to a support line either at the 1850 level or 1800, and then when the dollar is finished with its bullish move, gold will reverse and rally in place of the dollar. And now let's move on to conclude this video and talk about the rest of the week. Number one, we do have a euphoric market for now. The mentality is still the same. Look for the light at the end of the tunnel regarding any negative news. If there is no vaccine optimism, we'll do stimulus optimism. No stimulus optimism, we'll do Biden's optimism. Blue wave optimism. Even though they're going to raise the capital gains taxes, they will actually double them. How is that bullish for the market? But if that doesn't work, we do have the new thing to look for: steroid optimism. We know the president, of course, took a massive dose of this mania steroid, and now he's talking about the economy and the stock market, bragging about it. And perhaps as soon as he's released from Walter Reed Hospital, he will come out in a tracksuit playing the Rocky soundtrack and running across Washington, D.C. And the market would rally and see it as positive news. Wow, the president went sick, came out of the hospital 20 years younger. It's like a time machine. However, as of course the steroid starts to wind down and disappear, we will have to face the music and perhaps switch and try to revive some of the other optimism factors on the list. The steroid goes out, no problem. Maybe stimulus will be back in. Stimulus not in? How about vaccine? Vaccine not in? How about a blue wave? Back and forth until a breaking point. But point number two, we are in no man's land right now. We are in uncharted territory. We have no clue if the president will be released today, whether his health will deteriorate in the days to come. Any bad news with the president's health will rattle the market again. So what do you do as an investor and trader during this very volatile time of uncertainty, uncharted territory? If you do have long positions, you don't need to panic. However, you need to think about a hedging strategy, buying puts on the names that you already own, or perhaps selling puts if you want to buy them cheaper, perhaps buying the VIX or the inverse ETF to protect yourself on the downside. Likewise, if you are a derivatives trader only, you have to hedge and reduce your risk as much as possible, using the times of volatility to open credit spreads, to raise cash. And if you're gonna do a bet one way or the other, make sure you make it a calendar call or put instead rather than a naked one, to give yourself a little more time. And of course, if you do have shorting positions and you are worried about a short squeeze that could bleed into your position, figure out where your shorts are. For example, if they are concentrated in the technology sector, it wouldn't hurt to buy some calls, say in the Qs or the T-triple Qs, or even a put in the short triple Qs. Having a contrarian trade here to protect you in case we have a massive rally in the days to come. Hedging becomes very important in a week like the one we're in right now. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.